Welcome. The GST law aims to streamline refund procedures, but navigating the standardized forms and strict statutory timelines can be complex. Today, we present a diagnostic guide to ensure your claims are successful. Governed by Sections 54 to 58 of the CGST Act and Rules 89 to 97A, the refund regime is comprehensive. Whether it's exports, SEZ supplies, or inverted rate structures, the law provides a clear, albeit rigorous, path for recovery. A critical insight for every taxpayer. Most rejections occur not because the claimant isn't eligible, but because of failures in documentation and reconciliation. A successful file requires three layers: data, evidence, and legal justification. Refund claims arise in many contexts, from the export of goods and services to supplies made to SEZ units and developers. It also covers deemed exports and the refund of taxes paid in excess or by mistake. Practically every business scenario is accounted for. However, the most fundamental rule is the timeline. Section 54 of the CGST Act mandates that every claim for refund across all categories must be filed within 2 years from the relevant date. Missing this window is often irreversible. Understanding the rejection mechanism is your first line of defense. It starts with your online application in Form RFT-01. The proper officer then scrutinizes your data against the supporting evidence provided. If a rejection is intended, the officer must issue a notice in Form GSTR-FT08 stating the grounds. You then have a mandatory 15-day window to respond online via Form GSTR-FT09. This communication loop is a vital statutory protection. To build a bulletproof file, we must examine the 8 statutory pitfalls. We've clustered these into 4 key areas: documents and data mismatch, eligibility and categorization, timing and compliance, and finally, computation and enrichment. Pitfall A is the missing document trap. Filing RFT-01 without mandatory proofs like shipping bills, export invoices, or bank realization certificates prevents officers from verifying your eligibility, leading to instant procedural friction. In a significant case before the Madras High Court, a petitioner faced rejection for delayed documents. The court held that if the application was filed within the limitation period, a delay in submitting supporting documents shouldn't invalidate the claim. The court ruled that the delay, in this case due to COVID-19, was a procedural flaw in the decision-making process. The rejection was set aside and the officer was directed to process the refund, emphasizing procedural grace over rigid timelines. Pitfall B is the data mismatch. This is one of the most frequent causes of rejection. Officers strictly validate the turnover disclosed in GSTR-1 against GSTR-3B and your refund application figures. Any discrepancy triggers a red flag. The Supreme Court and later the Andhra Pradesh High Court have addressed these mismatches. While the court noted that rectification of GSTR-3B returns is generally impermissible, it also directed authorities to protect the taxpayer's substantive rights. Specifically, the court directed authorities to reconsider claims where adjustment in subsequent returns was not feasible, ensuring that technical mismatches don't lead to the permanent loss of a legitimate refund. Pitfall C focuses on eligibility. Refund of accumulated ITC requires that the credit is legally admissible. Taxpayers often inadvertently apply for refunds on blocked credits or personal expenses which are strictly ineligible. The Guwahati High Court recently dismissed a petition where these conditions weren't met. The court clarified that if ITC is blocked in the electronic credit ledger, it cannot be claimed as a refund, though it might be used for future liabilities. However, the Gujarat High Court protected transitional credit. It ruled that credit under TRAN-1 pertains to opening balances and must be considered for refund eligibility, safeguarding the taxpayer's entitlement against misplaced administrative circulars. Pitfall D is a common procedural error, selecting the incorrect refund type on the portal. Choosing with payment instead of without payment or claiming under the wrong head leads to immediate procedural rejection. The courts have shown some leniency here. A recent judgment held that a claim cannot be rejected merely because it doesn't fall within a specific enumerated category, directing the revenue to reconsider applications in accordance with the spirit of the law. Pitfall E is the timing trap. As per Section 54, the 2-year limitation is absolute. Any delay typically makes the claim ineligible. However, judicial precedents have carved out critical exceptions for procedural delays. The Madras High Court ruled that when a claim is refiled after a deficiency memo, the time period from the original filing to the issuance of the memo must be excluded from the 2-year calculation. This prevents administrative delays from penalizing the taxpayer. Similarly, the Jharkhand High Court ruled that the refund process cannot be strictly limited by the 2-year period if justice demands otherwise, quashing rejection orders and directing refunds with interest in specific equitable circumstances. Pitfall G occurs when a taxpayer fails to respond to a deficiency memo. If an officer finds your application defective, they issue an RFT-03 memo. You have exactly 30 days to rectify and refile, or the claim is closed. But this power isn't unchecked. The Karnataka High Court quashed memos where the officer repeatedly issued deficiencies for reasons outside the statutory list, calling such actions arbitrary and violative of Section 54. Pitfall F is the math trap. Common errors include wrong turnover calculations, including exempt turnover incorrectly, or misapplying the inverted duty formula. These computational errors lead to partial or full rejections of the claimed amount. Pitfall H is unjust enrichment. Under Section 54(5), the department examines if the tax burden was passed to another person. Only the person who bore the ultimate economic burden is entitled to the refund. The Gujarat High Court emphasized that the refund is only for those who actually paid the amount. This principle ensures that the state doesn't refund tax to someone who has already recovered it from their customers. In a landmark Karnataka High Court ruling, the court protected a taxpayer's right to a refund on a failed contract where GST was paid on an advance. Retaining the tax without a supply violates restitution principles, and the refund was directed. To avoid these pitfalls, use our pre-filing diagnostic dashboard. Start by verifying the correct refund category and ensuring your refund period is exact. Reconcile GSTR-1 and GSTR-3B fully before filing. Next, ensure your ITC matches GSTR-2B perfectly and that no blocked credit is included in the claim. Verify every invoice detail and validate your bank account on the portal to prevent payment delays. Finally, attach all mandatory supporting documents like BRC and FIRC. Check the 2-year limitation period rigorously and have a proper legal reply pre-prepared for any potential deficiency memo. Your defense strategy rests on 3 pillars. The first is invoice level reconciliation. Data must perfectly align across GSTR-1, 3B and 2B before submission. This eliminates most data mismatch red flags. The second pillar is statutory evidence. Do not wait for scrutiny. Attach every required BRC, FIRC and shipping bill upfront. A complete file acts as armor against procedural delays and RFT-03 memos. The final pillar is legal justification. Use the judicial precedents we've discussed to push back against arbitrary deficiency memos. Understanding your substantive rights is key to aggressive and successful compliance. In conclusion, most GST refund rejections are a failure of documentation, not a lack of eligibility. By building a bulletproof file with accurate data and complete evidence, you significantly reduce the risk of rejection. Stay ahead of the 8 pitfalls. From the 2-year statutory limit to the unjust enrichment principles, every detail matters in securing your legitimate claims and maintaining maximum compliance. Thank you for following this diagnostic guide. With the right preparation and knowledge of the law, you can navigate GST refunds with confidence, stay compliant and successful. Thanks for watching. If you want such type of contents, then click on the like button and subscribe the channel Indian Taxation Pe Charcha by clicking on the bell icon.